So let's now look at the FII flow thesis and see where the numbers are pointing us. So in the period October to Feb 25, so basically the period from the top till, let's say, Feb 25 is right here. Nifty was down about 16%, and here you can see that during this period, FIs sold 3.23 lakh crores of stock net, and Nifty was down each month at 6%, half a percent, 2%, half a percent, and 6%. The last 6% coming with very few FI sales. So sort of falling under your own weight kind of situation happening there. Whereas from March 2025 to April 2025, these 2 months, we've had Nifty go up nearly 10%. And in this period, FIIs have bought 2000 crores in March, 2300 crores in April, and Nifty is up about 10%. So not much of buying, yet markets are going up. So we want to study what is the FII flow analysis or relation with index movements. How influential is the FII move? So let's go back to history and see, what kind of moves happen with what kind of FII inflow. So FII is pumping in 13,000 crores in March 2009, right here after the GFC crisis, which was 20 times average of previous 3 months, 6 times average of some of previous 3 months. And the market moved up somewhat like 28% also because it was coming out of a bottom. October 2007, another move just before the GFC plus 17%, where FIs bought 8,000 crores, also two times previous average of 3 months. And then you had uh, basically previous 12 months when we had this fall of 1 lakh crores. Then there was a huge rally where previous 12 months was 66,000 crores plus. Here it was flattish. Previous 12 months was 26,000 crores negative. Here market went up in a big way, 14, 15, 42,000 crores invested here. Then you had October 21 to June 22 period where markets actually came off. FI sold 3 lakh crores at this point. And then you had a jump up from March 23 to July 23 where FIs were buying 76,000 crores. So all the instances of monthly gains and falls we've categorized into three categories: 0 to 5% monthly gain and fall, 5 to 10% monthly gain and fall, and 10% monthly gain and fall. So three buckets are there. And let's see how many times FI buying or selling influence these buckets. So if you look at the 10% plus months, all these months are there in Nifty where Nifty clocked more than 10% in 1 month. And there were nine such instances in the last 25 odd years. And eight out of those nine instances is where the FIs actually were on the buying side and DIs were on the selling side. And you can see there was one instance, April 2020, just after COVID, where the rally came up, but FIs were still on the sell side. Other metrics of 5 to 10% Nifty gain, you had 37 such instances. And in 35% instances, you had FIs buying and DIs selling. 35% instances where FIs were selling and DI buying, so no influence really of FI buying or selling here. But when both FI and DI were buying, that was about 30% of this entire statistics. In the 0 to 5%, of course, there were much more instances and more difficult to analyze that behavior, 78 instances. And you can see 41% of the time FIs were buying, 33% of the time FIs were selling, and DIs were buying. And when both were buying, that was in about 26% of the period. On the flip side, when we look at negative months, so Nifty, whenever it has lost 10% or more in 1 month since 2007, so about 18 years of data is there. So there were about six instances: October 2008, March 2020, June 2008, January 2008, Jan 2011, and September 2008. And in each of these instances, every time the market fell 10% or more, it was, you can basically see that the pattern was FIs were selling and DIs were buying. On the sell side, when we had 5 to 10% kind of falls, 87% of the time again FIs were selling and DIs were buying. And in the instances where Nifty fell a little less, 0 to 5%, in those months you had primarily FII selling and DI buying again 75% of the time, and rest were distributed in the other combinations. So what are the trends that we observe here? That all 10% plus positive months in the last 18 years have witnessed FII buying and DI selling combination. All 10% negative months since 2007 has witnessed FII selling and DI buying. So absolutely the reverse of the 10% positive months happens in 10% negative months. Whenever FIIs are buying and DI is selling, there's a good chance that the Nifty is going to move big. All 5% plus positive months have witnessed 70% of FII buying and DI selling, and all 5% negative months have witnessed 90% occurrence of FII buying and DI selling. Uh, this should have been FII selling and DI buying, sorry. So this trend, basically FIIs have net been 66% of the time buyers when Nifty had positive monthly returns, and 77% of the time you had FI selling when Nifty had negative monthly return. That itself is telling you a very rough probability that whenever FIIs are not buying uh, big, or they're selling, you are likely to have a good probability that Nifty is going to be negative month. Whenever you have FII buying happening, there's a good probability you'll have a positive month. So you have to wonder, FIIs have started to buy recently. Whether this will sustain or not is of course another question. But if it is sustaining and we see another month of FII buying and DII selling, or FII buying and DII buying, is that sort of pointing us to more higher ground for prices and for the Nifty? Because you see, always the markets will climb up a wall of worry. We are having a lot of worry. The war worry is there, the earnings worry is there, the US dollar dominance coming off. So what will happen to a lot of global money going here or there? So a lot of those narratives are there, but the statistics can provide you with good probability of what is likely to happen. So the takeaway from this here is that with global trade tensions rising in US, China, India is emerging as a preferred alternative. That's one narrative that one would like to believe. And the strategic shift is drawing FII interest towards India in a more bigger way than usual, perhaps. That's why we are seeing both FIIs and DIIs are on the same side many days of this month, and it can drive strong upside in Indian equities like we have seen in the last month or so. Recent FI buying is also suggesting that global investors are positioning this for India-centric opportunity. And FI inflows historically has always, amplified the market momentum. And if the trend continues here, then we may see some very strong price movements going forward. So unless we see FI is really dumping Indian stocks, I'm not so sure whether we will see any deep downsides coming forth. So that should be one statistics, one data point one needs to take care of, is where is FI buying and selling happening, and how much of it is happening on a day-to-day basis. I think that is a very big, not just a liquidity fund flow reality, but also a sentiment driver. DII buying is not driving sentiment. FII buying drives sentiment towards buying the market. And so is the reverse. Now, you may say, why should that be? I mean, there are some questions that perhaps at least I don't know the answer to. But I know for sure if 10,000 crore FII buying comes today, market is happy. If DIIs are buying 10,000 crores, people say, okay, what's the big deal? So that's the sort of psychological connection people have made with FII buying and DII buying, that whether foreigners like India or not is the main driver of the sentiment uh, for Indian market. So do you think that FIIs will continue to buy? Let us know in the comments. And is it a start of a massive FII buy leg? It will be great to hear your comments and read your comments. Thank you so much for watching. Please do like and share these videos, and do subscribe to the channel. Thanks. Bye.